All right, glad to have you back. Mr. Wale Olusi, Director Deals Advisory, PwC Nigeria. He is with me for this conversation. Now, let's look at this in nominal terms now, Mr. Olusi. 2019, 205.09 trillion naira. 2020, 213.63 trillion naira. 2021, 243.3 trillion naira. And now we are at 372.82 trillion naira. Now, looking at these figures and the sectors that serviced or got us to this point, what do you make of them?
Well, I mean, the NBS, I think they will still need to provide a little bit of more detail on, some of the items that, have driven the changes. But obviously, a few sectors came out clearly. Services as a bucket of sector is now 57. And if you dig in a little bit inside of that, I think real estate is now a significant contributor to that. I think a lot of activities is happening in the digital economy as well as the creative industry as well. So you would see some of that. Some activities in the informal sector seems to also feature in the report. I think that what the NBS has done is to just, include the structural changes that has happened in the Nigerian macroeconomy and try to capture it in how we calculate our GDP and see how that affects the overall size of the economy. And of course, as you now measure that growth going forward, and of course for policy decision making as well, it also allows government to situate things in the proper perspective. But if you look at it, industries, which is a very key sector, by the way, because if we want to achieve a growth that will take us to 1 trillion in a few years from now, that's a sector we need to look at. That industry contributions fell slightly, and I think agriculture needs to be doing much more as well. But we didn't see a lot of growth in that sector when you look at the rebase number. Yeah.
Okay, moving forward now, you talked about these sectors indeed, but looking at the performance of the economy in its entirety and looking at inflation that has started to dwindle, well, let's see, what do you make of Nigeria's economy following the reforms which brought us to this point where we are? Do you think that we are getting to that point where the storm seems to be over?
Well, I think one big issue that we need to be happy about is that some form of stability is returning back to the economy. And I think if you look at the inflation number that you just alluded to now, with the moderation that we've been seeing recently and the decision of the MPC recently, I think one thing is critical. From a policy point of view and how the economy itself is doing, it looks like the focus is on stability. You need to get general price level to a level where it is below 20% and significantly close to 10% for you to see growth. So I think stability, especially in the exchange rate market, we've seen a decent level of stability there. The reforms in the oil and gas sector around subsidy and some of the things happening in the upstream sector is very good. It has reshaped the overall consumption pattern in the system. The foreign currency as well as the monetary policy reform has also been significant in the way it is affecting the overall consumption pattern in the country. And you will also see some effort in the fiscal side of things as well, where there's been a lot of revenue improvement, and the tax reform that has recently been enacted and would officially be implemented very soon. These are huge reform. The good thing is that the macro is stabilizing, but now prices needs to come down. I think that's what CBN is targeting. Once the price come down to a level where we can start focusing on growth, then it would be nice to see what the policymakers the next step they take to drive that growth.
Do you think that the economy is as diversified as it should? Because, you know, the talk of diversifying our economy is something that I've heard for years. But I'll ask you practically, do you think that we are indeed diversified at this time? Looking at our resources and where all of this growth is coming from?
We are not yet as diversified as we should be. I mean, I think that is also clear. When we took the huge devaluation and the currency was also depreciated simultaneously in the last few years, you would see how very quickly the economy came down in terms of the size. And if you see the rebased GDP number, the contribution of the oil sector has also reduced significantly, I think less than 5%, while the non-oil is now, you know, very, very, you know, significant compared to oil. Services continue to expand by to up to about 57% at the moment. But if you look at what is driving this, there's a lot of activities in the trade sector. There's a lot of activities happening in the financial services and, of course, the telecom sector. So we don't have the kind of diversity that we have that would carry the rest of the economy along. Because when I say the rest of the economy now, we need sectors that can create a lot of jobs and deploy our over 200 million population into productive activities that will help us generate the kind of quality of life and economic development that we need as a country. So the economy is not yet well diversified. We don't have enough activities happening in the industries. At the moment, we are still, if you go out in the street, the bulk of the cars that are driving are still either imported Tokunbo cars or some form of cars that are assembled outside this country. So that sector is not yet well developed. The power sector, there's still a lot that can happen there. Even they agreed there should be a low-hanging fruit. There's a lot we can do there. One other point I wanted to make about, you know, the level of diversification and how the oil sector has dropped is that if you think about which sector is bringing in exports revenue for Nigeria, you take out the oil sector and you start wondering where else. Maybe some of the activities happening in our creative industry and in digital space now is supporting, but we need to drive exports. And that X component of our C plus high plus XN, where you look at the GDP computation, is still very weak, and we need to look for how to drive production that we can export. What can we sell to the rest of the world? By the time we start doing that, yes, would be, you know, where we need to be in terms of diversification.
Mr. Lucina, just give me a moment. We are getting live pictures from Abuja, where the All Progressives Congress is having their NEC meeting. And the new chairman of the party is expected to be elected at this meeting. Yeah, so we'll be giving you those pictures live, and Business Nigeria will continue, obviously, on all other platforms as we continue our conversation on the other side. Thank you so much. I mean, Mr. Wale, Lucy, back to inflation now for me. We've seen 3 months now consecutively, I guess, after the rebased CPI. We've seen that constant deceleration in inflation. But, you know, some will argue with you that when you get to the market, that's not what we're seeing. You know, the normal argument of this. So when do you think, or what do you think needs to be done? One, to address food inflation. Let me ask you that question that way. Are there quick wins with regards to food inflation for Nigeria? Because I believe if the price of food, issues around food is addressed, I think that will be a big win, even for government and for everyone.
Yeah, thank you. That's a good question. So for food inflation or inflation generally to maintain the downward momentum and, of course, come down to the level that central bank is targeting. I mean, I heard the central bank, I mean, is targeting single digits. That's a very good target. But I think the long-term inflation target if you look at Nigeria historical inflation rate, has been something, I mean, the level that, you are probably going to be certain we can get to reliably and stay there for a while, it's probably between 11 and 12%. If you look at what has happened in the last 20, 30 years.
You mean
I mean,
powder?
we can get there, but how do we get to that level? You need to think about what are the factors driving inflation in Nigeria. In the last few years, massive reforms in the exchange rate market or the currency market, massive reform around petrol prices. If you put those two combination of activities together, or what you can call fiscal actions, they have been the biggest factor that has led to the spike. So now that the central bank is controlling the narrative in the currency market by returning to orthodox monetary policy, I think if we maintain that, ensure people are not, driving volatility in the currency market again, because we still export a lot of what we consume in Nigeria. And even though we produce a lot of our food, the bulk of all of that still rely on transportation costs for you to move it from the rural area to the urban center. So the prices will be affected by the cost of transportation. If we can, maintain price stability around energy prices, price of petrol, price of electricity, all these critical prices that affect, that induce the price of food, then we'll continue to sustain that downtrend. If the CBN is able to support currency stability, and as a government, we are able to continue to sustain our exports in a way that export proceed or the external reserve continue to improve, and we are able to defend the currency at the level it is at the moment, then what you would have is that inflation rates coming down, then prices will be stable. I am not sure the price of food and services will reduce, but at least they will be stable and inflation can come down. And that will also give the rest of the economy, because wages also needs to go up. That's a critical component that nobody is talking about. That gives the economy enough breather for wages to go up. People can now afford, the regular staple food and everything, and then the system itself can get a breather, and then we can return to the level we were before, what has happened in recent time, and how we got to where we are now. I think that can take us a few more months from where we are now, but the central bank definitely need to sustain the short-term policy measures that they have taken to drive the rates down a little bit more. Yeah.
Seeing that decline, I spoke to the director of central bank too earlier on this chart, and he was also talking about that they've seen that decline, they are concerned about it. Are you seeing that maybe there could be a shift? One, because you would agree with me that the real sector is not really enjoying having a good time at this moment. Borrowing for over 30% is not the best way to do business. I don't know what kind of business you can do at this time that you make the necessary profit if you're borrowing at above 30%. But if we see this decline, do you think that the MPC could have a shift maybe during their next meeting? Some say no, they might still have to monitor the situation for more time. I don't know how that comes to your understanding.
Look, Tolu, from an economic policy point of view,
yes, please.
There's something you can't chase at the same time. You need to choose. You need to either at a particular time, especially when you have high inflation rates, you need to choose between price stability or economic growth from a policy point of view. I think where we are right now, and I think corporates should also think along that line. Do you want to worry so much about investment and the cost of debt, or at least for price of, the input that goes into your production to be at least stable so that you can rebuild your revenue levels to where they used to be, and then we can all start growing again? From a central bank point of view, I think what they are trying to do, the goal at the moment is not obviously growth. I think it's stability. They need to get all the hidden dollars that is not yet supplied into the market out, and that's why the rates are still, quite high. Because so long as investment in Naira is attractive, then people would not collect their salary when it comes in and start looking for dollar to buy. They will invest in treasury bills, they will invest in equity, and the pressure on the FX will not be as much. So I think the central bank is focused on that price stability right now. And once you achieve an inflation rate that can engender sustainable growth, then they can start dropping that rate. And then even the private sector, can have the opportunity to now start investing again. So I think it's always a dilemma for central bank, because once rates are too high, the private sector is clearly going to complain about cost of funds, which is important also. But I think if you look at where we are coming from, where rates were really low, but exchange rate was a huge problem, we're not better off. Everybody was complaining also. And I think right now that, there's stability, I think this is a better position to be with stability. You just need to track that inflation rate downward a bit more, and then rates can come down, because at the moment we need to attract a lot of actually foreign capital into the system, so that the growth we are looking for can come in form of those foreign capital. But at the same time, it gives us stability from an exchange rate point of view. And with that, inflation can come down, because now you are sure that whatever you bought yesterday at a particular price, you'll still buy it at the same price tomorrow. Not what we're dealing with before, where the price of everything changes almost every day. So I think we need to get to that level where prices are stable, and then we can start tracking growth again.
Interesting stuff. Mr. Wale Olusi is Director Deals Advisory, PwC Nigeria. Let me help say that his views here are his personal views and not that of PwC. He's just expressing his view as an economist. I must thank you so much. I said again, it's good to see you. Thank you for being on the program, Wale. Hope to see you soon.
Yeah. Yes, sure. Thank you so much.
All right, then.
Rest of your day.
All right, you too.